Hey everybody, what is up? Welcome back to Funnel Trade. I spent a lot of time today thinking about patron Ben's question from yesterday that I answered in last night's video, and I thought about a lot more things that I want to talk about and just general discussion on the topic of markets and understanding markets. And the thing that I kind of thought about a lot today was the old saying that markets are a data compression algorithm. And what does that mean? Well, let's imagine that you're going to go out and potentially buy a box of Spider-Man collectors. Okay. So what you're going to look at is the price. You're going to look at the market depth. You're going to look at the sell-through rate. You're going to look at probably the price history. You're going to think about what kind of capital you have to allocate, what kind of risk tolerance you're willing to stomach, uh, what other things you could alternatively spend your money on. You're going to think about a whole lot of things, and to the extent that some of those pieces of information come from the market, like current price and the sell through rate and the market depth, you're going to assign implicitly or explicitly, probably implicitly, you're going to assign a weighting to each of those. And then you're going to tally it all up, again, implicitly or explicitly. And you're going to say, I think this box is worth X dollars to me in my current situation. And then you're going to compare that to the current price you can buy it for. And, if you can buy it for less than X, you'll probably buy it if you're doing an honest assessment. And so what happens when you buy that box? Well, the market becomes aware that some guy bought a box at a particular price at a certain time. And all the rest of the information that you put into that process of deciding to buy that box is lost. And then if you think, what information does the market retain? Most recent sale price, sales history, volume, sell-through rate, and on TCG Player it has the sell side of the order book. So that's the information that the market retains from all that much larger picture that went into your decision to buy. And you can think of all the decisions not to buy, all of those analyses that come up with the decision to not buy. And you can imagine all of this mirrored on the other side of the transaction where someone makes the same kind of decisions whether or not to sell, and maybe to sell or to not sell. And all the information that goes into all those decisions gets distilled down, it gets compressed into that little bit of information that's left that we can go on TCG Player and see. And so that's what we mean when we say that markets are a data compression algorithm. And so what does that have to do with patron Ben in his question last night? Well, he said in one part of his question that um, he felt like he could no longer understand what the short term people in the market were doing. Like he could no longer predict it. And I think the thing is, he may be becoming aware that you cannot predict what they're going to do. You cannot understand it. None of us can understand markets because it's a data compression algorithm, because the information has been lost. And so an understanding cannot be obtained. I don't have some magical understanding of markets. And so we have to ask ourselves, what can we do in place of all that information that is lost? Well, you try to develop strategies that are palatable to you that you think will give you an advantage in the long run. What have I always done? Well, I've tried to buy assets when they're out of favor. I look for things that the market does not like currently. And that's a lot easier when we're in a bear market, when we're in a crazy bull market for both Magic and Pokemon, like we've been here for, golly, 12 months for Pokemon and 24 months for Magic at this point. We've been in these kind of bull markets this long. It's hard to remember that in bear markets, you can be counter-cyclical, you can be contrarian, and you can make a lot of money doing it. And so that's what I've always tried to focus on. And like I said, in different markets, it's something that I can show a lot more than I can right now. But also, long ago, probably sometime in the mid 2010s, I realized that most assets in most markets on the long timeline increase in value. And the ones that don't, you can identify those. I mean, low yield bonds don't really increase in value much. Typically, precious metals don't increase in value relative to inflation very much. You know, there's a lot of assets that don't increase in value, but you can identify them. It's pretty easy because they're typically their own asset classes. But you can look at things like blue chip stocks, stocks in the S&P 500, most Pokemon boxes, most Magic collector boxes. You can look at these things and you can say, oh, if I look at the price history of these, again, that little bit of information that's left over from the market, if you look at that long price history, you can see that the values tend to go up over time. And that's when you zoom out to the long timeline. And that's why I always emphasize to people that, if you're scared of investing in the stock market because there might be a crash, well, go back at this point, you have to look on a 20-year timeline, but you'll see before and after the great financial crisis. And you'll see, oh, that was just like a tiny blip in the line. And then it just kept going up for the 15 years after it, with the exception of a couple other blips in the line. And so you don't have to understand the entire market. And it's kind of a minor watershed moment when you realize, hey, I don't need to know everything. And in fact, I can't know everything because so much of the information, the vast majority of the information that shaped the market has been lost by the time you actually see what is available in the market. And so come up with those ideas that work for you, that you think are intelligent. Maybe you agree with mine, maybe not. Maybe mine are wrong. Maybe mine have only been good for the last 20 years and, in the future they'll completely break down. So you always need to re examine that for yourself. But look for those kind of ideas. Don't try to think that you are going to be the first person to divine a complete omnipotent understanding of how markets work. And when you get to that point, you'll feel a lot more calm about investing in anything because you won't feel like, oh, there must be some shadow cabal that manipulates everything, like some people think. Because you'll realize, oh, yeah, that wouldn't even work because all the information would be lost to them too. So they could no more manipulate things than I could. And so you'll feel a lot better, you'll feel a lot more confident, and you'll feel a lot more at ease where you get to the point where, you don't look at your 401k plan for months at a time. You don't look at your sealed box inventory every day and pour over it. And you'll just be a lot more stoic about investing and building wealth. And it'll seem a lot easier to you because you're not trying to solve an unsolvable problem of reversing that data compression. Let me know what you think, guys. Thanks to everyone who makes this content possible, especially my very generous supporters on Patreon. Like, comment, share, and subscribe, and join me on Funnel Trade. Buy a hat.